What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. Today, we're going to take a look at the chart on Everspin Technologies, symbol MRAM, the small cap data storage company. And I want to take a look at this and give credit to one of my favorite followers on the Pelican Trader account on the X platform, Eraldo. Okay, came up and it said, "Hey John, take a look at Everspin. This thing looks great." And the second I saw it, I just totally agreed. So a big shout out to Eraldo. Okay, so let's analyze to see this chart to see if we can find low risk, high reward potential entry and exit points. Okay, so going to stay on this first daily time frame to find our first support level, and our first support level is right here. 12.19 to 11.13. So the way you would construct the trade using that support level is you'd patiently wait for a price to pull back if it's going to bounce off that level. You'd place a buy limit order at 12.19, protective stop just below 11.13, and then you'd have a very limited. You'd only have like a dollar price range of risk. So 100 shares, you'd be only risking $100 for a lot more reward potential if we're going to go back and retest that prior peak in the 17 range. Okay, so $1 worth of risk for $5 worth of reward, 5-to-1 reward to risk ratio. The risk is, however, that maybe we don't pull back to 12.19 and you miss the trade completely. So what I'm going to do next is I'm going to go see if we can change the time frame to hourly to see if we can find a support level that's higher that we're more likely to get filled. Okay, and there is a support level on the hourly time frame right here. We just bounced off of it. Okay, so that bounce has already happened. Bounced off of it. Now, maybe we get another chance. Maybe we can pull back. That's only 75 cents, 80 cents. That's only 80 cents lower. Okay, can we get an 80-cent pullback when we just had a $3 pullback in the last several days? So could we get another drop of 80 cents? It's quite possible. So two ways to construct this trade using the hourly time frame. So I'm going to show both of those right now. Once again, the first one was already laid out for you. You just wait for price to pull back to 12.19. I'm not going to construct that trade right now. So I'm going to go for the aggressive one in this example. I'm not saying you take this trade. This is not financial advice. But I'm going to set up a potential aggressive entry. And there is one where you just simply buy at current price and put your protective stop just below that first support level. So we bounced off it once. Maybe we bounce off it again and you don't get stopped out. Okay? And having the entry price or right at current price, that ensures you're going to get filled. And then you could have your target set somewhere in the 17 range where we reversed last time. Okay, just in front of 17. That trade would have about a 2-to-1 reward to risk in it. You don't have to have your target there. You don't even have to set a target. You can simply, if you get filled and it starts working, you can simply use a trailing stop and have your stop trail price as it goes higher. But price had reversed there once, maybe it reverses again. This is the conservative target, okay? So that's one way to construct the trade. Another one would be, let me draw a completely different trade here, would be wait for price to pull back to that upper support level. This way you're taking only a little bit of risk. You're only taking 46 cents worth of risk, okay? So 46 cents of risk per share, target goes in the same place. That trade setup has almost a 7-to-1 reward to risk ratio. Okay? So two potential ways to trade around with current price where it is using this as a support level. Once again, I'll just do the third option here. If you wanted to be more conservative and take the risk that you're not going to get filled, protective stop just below 11.13, buy limit order at 12.19, target goes in the same place, and that trade setup has about a 4-to-1 reward to risk ratio. So three potential ways to play MRAM for your entry with a clearly defined entry, a clearly defined stop, and a target that you could use just as you could use it as a hard target and just get out if it gets there, or you could have no target whatsoever and just trail the stop as it heads higher. So let's wrap up the session. Hope you got some value out of the session, folks. I'll be back every day this week with more technical analysis. In the meantime, I wish you the absolute best in your trading and investing, and we'll see you soon.